Most people ask AI random money questions like, what stock should I buy? Or how do I get rich fast? But today, we're doing something more useful. We're turning AI into a practical tool for understanding asset allocation, without pretending AI can predict markets or guarantee financial results. Disclaimer. This video is for educational purposes only. I'm not giving financial, investment, tax, or legal advice. AI tools can help you think, but they cannot guarantee profits or predict the future. Always do your own research and consult professionals before making financial decisions. Thank you. Now let's talk about why asset allocation confuses so many beginners. A lot of people jump straight into asking, what stock should I buy? What crypto should I hold? What ETF is best? But those questions usually come too early. Because before choosing investments, you need a system. Asset allocation is simply how you divide money across different types of assets. Think of it like building a team. Different players have different roles. Some parts of your portfolio might focus on stability. Some focus on growth. Some help reduce risk. The reason allocation matters is because two people can buy the exact same investments and still have completely different outcomes depending on how they spread risk. And this is where beginners often get stuck. One creator says go aggressive. Another says play safe. Another says you're missing opportunities. So instead of copying random advice online, we can use AI to organize our thinking. Not decide for us. Help us think. That distinction matters. Let's start with the three broad categories beginners usually hear about: conservative, balanced, growth. A conservative approach generally focuses more on stability and protecting against large swings. People with shorter timelines or lower risk tolerance sometimes prefer this style. A balanced approach tries to mix stability and growth. You're accepting some risk while still trying to reduce extreme ups and downs. Growth strategies usually prioritize long-term growth and often accept higher volatility. That means larger potential swings, both up and down. Notice I'm not saying one is best, because the right allocation depends on context. So how do we actually use AI here? Start with three things: your goal, your timeline, your risk tolerance. Let's build an example. Imagine someone saving for a long-term goal 15 years away. Moderate risk tolerance. Wants growth but doesn't want extreme volatility. Now we create a prompt. Try this. Help me understand beginner asset allocation strategies. My investing timeline is 15 years. My risk tolerance is moderate. Explain sample conservative, balanced, and growth allocations using percentages and explain risks for each. Educational purposes only. Notice what we are not asking. We are not asking, what will make me rich? We are not asking, what investment will explode? We're asking AI to explain. That usually produces better results. When AI gives you outputs, don't immediately trust them. Interrogate them. Ask follow-up questions. Ask, what assumptions are you making? Ask, what are the weaknesses? Ask, when would this allocation perform poorly? Ask, what type of investor would dislike this approach? This is important because AI tends to sound confident, even when information is incomplete. Now let's walk through hypothetical examples. A conservative setup may emphasize lower volatility. That could appeal to someone who gets stressed by market swings or has shorter time horizons. A balanced setup may try to create middle ground. Not too defensive. Not too aggressive. A growth-focused setup may prioritize long-term appreciation, but often comes with bigger swings. Now ask yourself something. If your portfolio drops significantly, what would you actually do? Because risk tolerance sounds easy when markets are calm. It feels different during stressful periods. This is why human judgment still matters. Here's a quick checklist. Do you have emergency savings? What is your actual timeline? How often will you review your allocation? Would short-term losses make you panic? Are you copying someone whose situation is completely different from yours? Can you stay consistent? Consistency matters more than constantly changing strategies. Another mistake beginners make is constantly rebuilding portfolios. Today growth, tomorrow conservative, next week balanced. Changing strategies every month creates confusion. AI can accidentally make this worse because you can generate endless new ideas. More ideas do not automatically mean better decisions. So use AI with constraints. Keep your prompts consistent. Compare outputs. Look for patterns. Verify information. And remember that simple systems are easier to maintain. Here's the framework you can copy. Step 1. Identify your goal. Step 2. Choose your timeline. Step 3. Estimate your risk tolerance honestly. Step 4. Use AI for educational examples. Step 5. Question the outputs. Step 6. Verify information elsewhere. Step 7. Start small and adjust over time. Your goal isn't building the perfect allocation overnight. Your goal is building a process you can repeat. Because good systems usually outperform random decisions. So now I want to know, which style feels closest to you right now? Conservative, balanced, or growth? Drop your timeline in the comments too. And if you want to see common mistakes beginners make when using AI for investing decisions, watch the next video. See you there. AI disclosure. This video was created with the assistance of AI tools. Some or all of the following may be AI-generated or AI-assisted. Script, voice, visuals, images, and editing elements. All content has been reviewed and edited by a human before publishing. If you found this video helpful, don't forget to like this video, subscribe to the channel, and hit the notification bell so you won't miss the next part of this series. Thank you so much for watching, and I'll see you in the next video.